Newsflash, you will not be able to sell the top. You will probably miss the top thinking that the top's going to be higher up, and it actually isn't. Most of you watching this video even now, put a bookmark on this video. You are actually going to be selling on the way down instead of on the way up, mainly because you don't have any trading rules in place to protect your portfolio at all costs. You haven't trained yourself to be satisfied with any amount of profit. You haven't properly set aside set percentages for your portfolio so that way you are protecting your portfolio at all costs. These are things that I talk about in the Better Traders Journal. Yes, it's not behind me today. I'm actually having this in hand because right now is the best time to go over the 5 trading rules of the Better Traders Journal. Now, before I get into this, what's up? My name is Aaron Dishner from the Better Traders, and you are watching Coin Bureau. More Coin Bureau, that is. I am posting regularly on the Coin Bureau trading channel. You guys can subscribe to that channel as well in the description below, I believe. But if you haven't subscribed to this channel, do it. Because even though this is more Coin Bureau, and I know that I'm the guy that's on the Coin Bureau trading channel, I need to talk to you about this. Now, please understand, this is not the same as this. This is a Bible. This is a journal. These are not the same. A lot of people think about their trading rules as a Bible, like it's this holy writing that you cannot go against, and these are rules and regulations you have to hold fast and steady to. I want to give you a little bit of advice right now. Not advice, I want to give you some comfort. Rules sometimes can be broken. Sometimes you can stretch the rules. But if you have no constraints whatsoever, and you're just kind of like doing whatever you feel like, you're going to be struggling with fear, anxiety, worry, especially when things are pumping. You would think when things are happy and bullish and prices are going up to like millions of dollars, that's not going to happen this time, but eventually they will. You will be so caught up in the euphoria, the greed, the idea of like, wow, I'm not just going to be able to buy a home, I'm going to be able to buy a planet with all this profit. You quickly abandon rules that help you to grow your portfolio in the first place. So instead of me sharing this really, really tiny text with you, we're going to be going over here to TradingView, and I'm going to be breaking down these rules to give you an understanding of why I think they're important and why I think that they're actually going to help you protect your portfolio and a lot of other stuff. So like I said, there are 5 rules. And the first rule is I will create a trading plan from start to finish. This one is like, wow, thanks so much, Aaron. I can't believe I missed your video. Like, this is life-changing. You guys have no idea how many of you actually don't pay attention to this. You see the price of something going up and you decide, I'm just going to buy in because the price is going up. Sometimes it's a good thesis. Other times it's really stupid because you're jumping in here, but you're not planning for this, for this, for this, for this. You don't know what's going to happen next, and you are not ready or prepared for what could happen next. Too many of you jump into a trade thinking this is going to make me money in whatever directions it's going to go. This is a very, very big fallacy that many traders and investors struggle with, especially in bull markets when everything will be pumping. Bitcoin will be going up higher. Alts will be pumping up higher. I believe this is going to happen by the end of the year. When things start pumping wildly, many people abandon trading rules that they have used to help grow their portfolio because they see things pumping. They think, well, it'll just keep pumping. It could be true. Yes, things could continue to pump. I would just recommend take the time to create a trading plan from start to finish. What is a trading plan? A trading plan is saying, well, I'm going to enter here. If it actually happens to pull back to here, I'm going to take a loss. And once it goes up to this level, I'm going to take profit, whatever the trading plan is going to be. And maybe your trading plan is actually going to employ multiple orders. Maybe you're going to buy some here, and if it falls down more, you're going to buy some here, and you're going to buy some here. You're going to be putting in 1 lot here, 2 lots here. This is going to be 3 lots there. I know this is terrible. I can't write really well with the brush tool on TradingView, but get the idea. I'm going to make sure that I'm entering my trade with a plan from start, wherever I enter, from that start point, until wherever that's going to be. Whether it closes in a profit or whether it closes in a loss. This is the first rule. Now, the second one is so important and it's extremely similar. I will follow my trading plan. Again, why is this a rule, right? I mean, this is basically the same thing. The reason why this is a rule is because you can create a trading plan from start to finish. Why isn't this I will follow my trading plan from start to finish? Because a lot of people don't take the time to first sit down and plot where they're going. This is your roadmap. Rule one is your roadmap. Rule number one is Google Maps. Okay, I want to go get some burritos tonight. Where am I going to go? I'm going to ride my bike. Okay, here's the route. Done. And then as you're riding your bike, you might be distracted by the pizza joint, or you might be distracted by the sushi place, whatever it is. It's one thing to create the trading plan. It's another thing to follow it through. And a lot of us, again, using this silly example right here, prices going up, right? We think it's going to keep going up higher, or maybe it's down and we think it's going to go up again. It's one thing to say, okay, this is the trading plan I'm going to have. But when you start to see the price after you enter fall lower and lower, some of you pull the trigger to sell too early, only to see the price go back up and hit your take profit target. It's happened to a lot of you, I'm sure. It's happened to me as well. You have to learn how to trust your convictions when you make a trading plan. Sometimes you'll be happily surprised buying a dip that doesn't continue to dip, and it almost gets you stopped out, but it rips and you actually close out in profit. It would not have happened if you did not follow the trading plan that you originally created. It is so important and so often overlooked. Rule number 3, this one is a kicker. I will not use more than 10% of my portfolio per trade. Now, this is where we start to draw the line between these two books. This is a trading journal with some rules. This is the Bible. Now you can get into the point where, well, you can get a lot of these flexible, wiggle room. 10% is a great idea to help you preserve your portfolio, because if you don't have a portfolio, guess what? You're not a trader, nor are you an investor. The reason why 10% works well is for 2 reasons. One reason is because for all of you that are not digitally impaired, you all have 4 fingers on both hands, well, basically 8 total, and 2 thumbs. So in total, we have 10 fingers. I think it's a great rule of thumb to have no more positions than you have fingers, okay? Now, why am I saying, 10%? Well, that's because you could actually increase this. Maybe you want to do 20% of your portfolio per trade. Maybe you're more aggressive, so you could do 20. Sure, go ahead. Maybe you even want to be crazier and do 25. I would not recommend going above 10%, or rather below, like 8%, 5%. Why? Well, we're in this to make money. We know crypto is extremely volatile. So in that case, yes, having 10 possible positions would be much more manageable, but actually, to be honest, 5 positions, way better. And the profit potential for 5 positions is great. 4, even bigger. But here's the drawback. What if one of those positions happens to fail on you? Well, out of those 5 possible positions with 20% on each one, if one tanks your portfolio, at least you still have 80%, but that's a huge hit. Whereas if you have 10, well, now you're not as focused and concentrated on one specific hold. It's going to be really difficult to divide your portfolio up into perfect 10% allocations. I'm not saying to go and revise everything and use like a cookie cutter to make it fit, but I am trying to help you understand that there is a reason for having basically no more than 10 positions open at a time. 1, so that way you can keep track of everything, especially when the market has a massive pullback, which you can bet your butt it will. And 2, this also protects you from a sudden downturn, another Terra Luna crash, another Ohm or Mantra crash, whatever that was. The list goes on. Too many coins have just had flash pumps and flash crashes out of nowhere. There's no guarantee that any coins, even the coins that are in the top 10, are going to be here in 4 years. This is why it's important to protect your portfolio. Now, rule number 4 is a doozy, but before I get to that, I need to make sure that you guys have actually hit the subscribe button on this wonderful channel. If you like what you're viewing right now, if you enjoyed this content, hit the like button. Also, leave a comment down below with your favorite rule of the 5. I know I've only shared 3 so far. That's because I want you to go over to coinbureau.com and check out the deals page. The first thing to check out is the Coin Bureau Club. It is a fantastic place to learn and grow and understand what is happening in crypto, getting a pulse on the market with my co-host Dan on Coin Bureau Trading, who's giving a lot of alpha and doing coin reviews, as well as Guy and Nick from the main channel. They're also on the server as well. So go ahead to the Coin Bureau website, check out the deals page. Let's keep going. I want to talk about these next 2 rules because these are some of my favorite rules, to be honest. Rule number 4, I will protect my portfolio at all costs. This is one that is non-negotiable. This is almost like a Bible rule, mainly because if you don't have a portfolio, guess what? You're not a trader anymore. How did that happen? I went all in on this meme coin that some streamer was sharing on Pump Fund and I lost all my money. Well, guess what? You won't have any money to trade with now because you didn't protect your portfolio at all costs. That means sometimes you're protecting your portfolio from you. You're making sure that you take preventative actions not to use more than 10% of your portfolio per trade. This is one way to protect your portfolio. Another way to protect your portfolio is making a trading plan and also seeing it through, following it. All of these work together. They all build into the culminating rule, which is, again, my favorite rule. And this is one that has taken me such a long time to really resonate with and also to just embed in my soul, deep down in my soul. Number 5, I will be satisfied with any amount of profit. I am not saying that I'm going to start a self-help group for traders and investors, and we're not going to introduce ourselves. Hi, my name is Aaron Dishter, and I have a problem with trading. And we're not all going to read these rules together. I'm not saying it's like you should hold it to that standard or whatever. But you have to understand that there is huge power. There is immense freeing power in this 5th rule. I will be satisfied with any amount of profit. I know I sound like a preacher on a pulpit. That's because I've been living and breathing this stuff for the last 8 years, and I've been helping and teaching a lot of people with our courses at the Better Traders. Again, you can find a link for that over on the Coin Bureau deals page where you actually get a PDF copy of this. You have to understand how freeing it is to be satisfied with any amount of profit. I want to prove this to you because you have no idea what the market is going to do. I can do the best I possibly can with all the information I possibly can. I can make the best possible trading plan for Bitcoin, and I think it's going to do like this, and I think it's going to do really well. We're going to go all the way up here to like $150,000. Amazing. I'm going to stick to my trading plan. What if the price goes up here and I go, okay, I want to protect my profit and I want to put a stop loss here, which is what I do often, and the price actually doesn't hit my target, but it falls back down right there and it gets stopped out with a stop loss at 127,000. Instead of me walking away with 30% of my trade, I'm only walking away with 10%. How many times have you sold prematurely and the price goes up? I know that there are memes for this. How many times have you sold being fearful when the price goes down only to see it go up higher? You have no idea how freeing it is to keep this close to your heart. I'll be satisfied with any amount of profit. The worst thing you can do to yourself is kick yourself with shoulda, woulda, coulda. That should actually be a cryptocurrency. Do not make it, but shoulda, woulda, coulda, SWC. But seriously, how many times you're like, if only I went in with all of my portfolio at Pump Fund at the very bottom, right? No one knew it was going to do this well. No one knew back at 22K, Bitcoin was going to go this high. We all have our good ideas of what we think is going to happen, but don't kick yourself with shoulda, woulda, coulda. That's a very poisonous mentality that will steal the joy and the actual reward of closing in the green. The reality is that many traders and investors do not make money trading. A lot of people lose money. And that's because many of them are abandoning or do not have any semblance of a rule set like I'm sharing with you in today's video. The reason why many people lose money is because they don't create a trading plan from start to finish. Neither do they follow it. Neither do they make sure that they are not putting, more than 10% of their portfolio per trade, or if they're going to be riskier, 20%, 25%, whatever, but having those fixed amounts that you're like, okay, this is it. This is the level. A lot of people that get wrecked repeatedly also do not pay attention to protecting their portfolio at all costs. Many people that don't make it in trading think with this one lucky jackpot win where I turned $1,000 into $1 million that every single trade is going to be like that. How many stories have you read about people, especially on Coinfessions, which is a great X handle, by the way, of people making tons of money on memes, only to feel like, if only I could just make a little bit more. Like this is an amazing airdrop. I made so much money, but I'm going to use it and try to trade it up with 100x leverage. I'm going to lose it all. That's basically what happened. Every single one is like that. Only a few people in those Coinfessions actually take profits, they're satisfied with them, and they improve their quality of life. The whole point. The reason why I am trading is to improve the quality of my life and also for my family and for future generations. That's why I do what I do. And it's not possible if I don't have some way for me to keep myself accountable, because the only one I have to answer to for my bad trades is me. It's not Wintermute's fault. It's not Binance's fault. It's not CZ's fault. It's not Nick and Guy's fault. It's not even it is my fault. But you know what I mean? You're not me. I'm not you. But you have to understand, you guys have to keep yourselves accountable. This is why I love the Better Traders Journal. And this is why these rules have honestly helped me to grow my portfolio from a little tiny itty bitty one, starting with $700 back in 2017. And now I have $710. No, I'm not going to share how big my portfolio is. Never do that online. But the main thing is that if you do not have a set of rules, you might have a good streak of lucky trades. You might get this amazing moonshot where your portfolio just absolutely balloons. But if you don't have a set of trading rules, trust me, you can kiss that beautiful balloon portfolio bye-bye. So before you go, I want you to watch this video next. And until the next time, you know what to do. Stay awesome and stay in the green. Peace.